Hello, all Auvorians. Today is June 6th. My name is Steve Vetterl, Auvoria Prime's CMA, your risk manager. So, if we could please do me a favor inside the chat box. Let me know if you can hear me and see my screen. Okay. Risk disclosure. Always a fun topic, right? So let's go ahead and read that. We have lots to talk about this Saturday. So please, as I always tell everybody, it's tough. We know this is like herding cats out there, but if you could just let your upline and downline know that we have an important Saturday here. Got a Q&A session. Got about an hour to spend, so we could probably get through a ton of material, maybe not get to all of your questions. But as I always encourage, please use the Q&A window, not the chat window, to post questions. Feel free to post questions. I'm going to be addressing the specific trading type of the software today. We're going to talk a little bit about that and what its goal is, because I got a lot of questions that were along the theme of last week. Hey, you know, in some cases, if you're trading the Euro ring, which is a complete piece of shit last week, why was the software continuing to just take levels and levels and levels down, trying to dig itself the way out? So I'm going to talk a little about the martingale system and have a couple of slides on that to show you guys. And then I want to talk about, obviously, the dollar's move and my Forex sort of looking back in the previous week, and so forth. But do keep in mind that last week was a huge move, dollar related, down. And the dollar took almost an 8-year dive just in terms of its level, which sent the vast majority of the pairs trading with the dollar, and you could even almost make the argument a good chunk of the 25 pairs that trade globally, into a tailspin last week. So, and I'll give you some quotes from some of my favorite hedge fund guys out there over the last 20, 30 years that have had just absolutely massive losses in a day, and how they conducted themselves in carrying forward. And there's a lot to be learned out of that. But let me just read the risk disclosure real quick. So trading the foreign exchange markets carries high risk and may not be suitable for all investors. It's really part of my job as your risk manager, to, you know, sort of help you guide through that. And just understand that, and I got a lot of questions related to this week, so maybe some of you weren't paying attention to this, but as far as compliance-wise, you know, Auvoria Prime does not have any recommended settings. You know, we're not a financial advisory firm. It's just licensed software that users can use however they want at their own risk. You know, some of the software does come with default settings. Seems like they probably didn't work last week compared to some of the comments I got, but you know, you do have the ability to customize these settings however you want. So Auvoria Prime has nothing to do with the customer's broker account. We don't solicit or take investments. We don't recommend any brokers. We just license software and sell amazing education. Again, a nice plug for our amazing coaches, educators out there in the different courses and trade channels. If you're not already subscribed to all of our stuff, I highly suggest you download Telegram. Even in the face of turmoil in the Forex markets last week, there was some really good points brought out by some of the different coaches, myself, Jesse. Lots to post on there in regards to that. But do keep in mind that these settings that we're going through on some of my live accounts that I'll show are not company recommended settings. They're just suggestions for how to have the accounts set up. So with that said, let's take a look at, let me shift over to the US dollar chart. Okay, so this is the US dollar, and as if you may have tuned in the last couple of weeks, you should see that I was talking a lot about a wedge pattern, which is more of like just a triangle pattern we were breaking into, we broke out of, and we've been trending down. This particular chart does not tell the story anywhere near as good as the one that I posted on my channel. So let me just jump over to there, see if I can get this to migrate over into the screen. I thought this was an excellent tell for the whole story of the week. Let me see if I can share the screen to see that. There it is. Okay, so what you should see now, which is a picture that was pulled off of Bloomberg. I thought this was really good, so I posted this on my channel last week. But essentially, it was just a double downer. So the dollar gauge hasn't seen a 2-week sell-off like this in more than 8 years, right? So it's related to a lot of global events. I think the market has gotten the problem that I'm kind of seeing is that the market is just getting whiffs, both currency and equity land globally, and for that matter, the credit markets, that there's more bailout and stimulus packages coming. So all that's doing, especially if it's coming into the U.S., I sent out that Forex cheat sheet a couple of weeks ago on my channel, and it just talks about, if we're going more in debt, essentially it's going to devalue the dollar, right? So they're talking about more bailout and stimulus, and that just took the dollar and just sank it. And related to the currencies, like the next page here, I'll shift over to the euro. If you guys are not understanding this, I would highly suggest just, because I see in some questions here, just watch this recording again when it's finished. It'll help you a lot. Let me just shift back over to, let's see, euro. Here we go. So euro screen, just make sure that's right. There we go. All right, so what you're seeing now is the euro, and it had just an absolute rip. Notice that almost the last 2 weeks, a good chunk of the last week in May, and certainly this first parts of June, this thing's done nothing but skyrocket up because the dollar's dropped, right? So know that the type of trading software that Einstein and Alexander uses is essentially what's called before I get into it, let me just jump back over to PowerPoint. I have so many screens, it's crazy. So let me just jump over here. Okay. All right. So the software uses what's called a martingale strategy. And I think it's important just to understand, what this strategy is. I'm just going to touch on this briefly because I got a lot of questions in relation to this. So I think that it's probably important that people understand kind of how this strategy works. But if you've been involved in Forex trading, essentially for any time, the chances are you've heard of martingale. Not a lot of people understand how it works. So I'll just talk a little bit about the strategy, strengths, risks, and how it's best used in the real world. So there are a few reasons why this strategy is attractive to currency traders. First, it can, under certain conditions, give a predictable outcome in terms of profits. So it's not a sure bet, and this week was certainly an example of that, but it's about as close as you can get. So secondly, it doesn't rely on any ability to predict absolute market direction. So this is useful given the dynamic and volatile nature of foreign exchange. So with deep enough pockets, it can work when your trade picking skills or the software's selecting skills are no better than chance. Though it does have a far better outcome and less drawdown, the more skillful the discretionary trader, or the software in this case, have. So, and thirdly, currencies tend to trend in a trade range over a long period of time. So the same levels are revisited over and over many times. As with, this type of behavior suits this strategy. So if you're looking at the PowerPoint screen right here, essentially you can see that, and we have what they call different levels, but the intensity of the buy side gets as the price goes down. In this particular case, just looking to get long the markets, right? Even though we're dropping, a lot of people say, well, why wouldn't you just flip? And well, the software in this particular case is betting that the market's going to go up. So very simply and maybe this one area wasn't the best buy, right? But the software's saying, well, the further we go down, especially since we think we're going up at some point, we're going to bet heavier on this. And this whole week, by the way, was a critical example in why you can't just set it and forget it. You can't leave these settings on and just have this software running all week. I could tell you that with the live 25K account that I'm going to show, It was turned off after a 1.5% return this week. But the accounts that I just let run in demo form over the last week, trading 3-pair ring, I mean, they got tortured because in many cases there was level 7s and 8s opened up, depending on the person's trading system and or software. And that really put the accounts in some heavy drawdown. And many of them that I saw as we peeled through them, you know, they made it to level 6, 7, and 8, and they hit that 250 pip stop that is built into the software, and it took you out. So I have a varying degree of opinion on that stop loss thing. Ideally, I think that the heavier you get into drawdown, if you're not getting close to wiping out the live account, and the software continues to, you know, take big. I almost think that in many cases you can remove that stop, you know, provided this is risk capital only, and let the software essentially dig itself back out. Because especially in the demo I watched this week that I run with Einstein, you know, it took way down into multiple levels, especially that Euro JPY, which really torched the account last week, and it took a lot of buys lower. So this is why it's critical to have settings on conservative. Pay attention to what I'm talking about and the other coaches. If you're trading the NZD ring, certainly Jesse had a rough week, but I'll tell you, he did a fantastic job of being able to pull out. And it still took a beating in some of the accounts. But it's really just boils down to being able to manage risk. So please, if you've learned nothing over the last week, learn that this is not a set it and forget it situation. You know, in some cases, the smartest traders last week, including all of our developers that built this software, they didn't even have it on the last 2 weeks. I mean, it was completely off. And, you know, because even sometimes the best software, you know, it can't pull out. But the important thing is that, I don't know, I'm getting varying opinions as far as how I feel about the 250 pip stop loss. You know, we adjust the software settings to be able to remove that. And in some cases, I felt like I should have granted a bigger net for the software to, you know, try and dig its way out, because it does have the ability to dig its way out. So martingale essentially is a cost averaging strategy. So it does this by doubling exposure, in some cases tripling on losing trades. So this results in a lowering of your average price, so that if it bounces, yes, you're much heavier in drawdown, but it has the ability to completely rebound, as we've certainly seen it do a bunch over the last year. So and as I just wind down the discussion on martingale, just know that it doesn't increase your odds of winning. So your long-term expected return is still exactly the same. It's just governed by your success in picking winning trades. And as the deeper you can get, hopefully there's enough room inside the account in terms of size to try and escape the drawdown. But essentially what the strategy does do is delay losses. So under the right conditions, losses can be delayed by so much as that it seems like a sure thing. So cost averaging, doubling exposure, resulting in the lowering of your average entry price. And, you know, the idea is just to go down and put a bigger, and eventually fate throws you in one single winning trade. It pulls you out of all of the ones that you've double or tripled down on. I know this seems counterintuitive to how a lot of professional traders trade, but as markets, especially in the Forex markets, are what they call mean reverting, meaning that as they get stretched away from a particular area, sort of a rubber band effect, if you will, down to a, you know, first, second, third, and hell, in last week's case, we hit almost a fourth standard deviation down on some of this. It's going to snap back. Question is can you endure the drawdown before it snaps back? So there's been enough evidence coming out, especially in our meetings with the developers late last week, that I'm just not liking this Euro JPY. So for the time being. So for those that have profit or had a good week last week, and you want to run the software on Sunday, I'd say, you know, maybe just keep a close eye on it. For those that are in drawdown, which is the consistent question I seem to get, and there's varying degrees of opinion on whether you should turn it off or turn it on, or, this and that. All I'm saying at this point is if you're in drawdown, you can afford to let the software dig itself out of drawdown, which it has shown the ability to do, and that's the beauty of a martingale system. Let it do that. Don't try and send me an email and have us sort of step in front of this thing, because guys, I'm not smarter than the software. I don't know how to, and plus I haven't had a lot of time in the last week, and I've been out in client meetings on a road show. So I didn't have, and that's probably one reason I turned we turned the big real account off, because I didn't want to deal with some of the volatility. So my advice to everyone this week is that if you have had profits, you haven't sustained any significant drawdown, I probably would not have the software on this week. So I hope I can't be more clear than that. Just because we came off a week of craziness, there was a lot of funds around the world, a lot of institutional traders took some big losses, and they're going to be reeling from that. And typically when something like that happens in some sort of what's called, sort of driven move, things just have a tendency to be a bit crazier out there. Not to mention the fact in the Forex calendar, which I'll go into next, we got the big OFOMC statements and the federal funds rate and the ensuing FOMC press conference at about 2 p.m. next Wednesday on June 10th. So, and keep in mind on Monday, by the way, also, President Lagarde speaks. She's the ECB president. She's actually a very smart lady, Christine Lagarde. But she's going to be taking questions in Q&A and all kinds of monetary policy. So we certainly could have some more bananas moves in these currencies because of some of these big regulators and European central bank heads to speak. So for those that really can't risk it with real money in any kind of live account, you've done fairly well. And I know there's a whole bunch of you out there because you've sort of posted results, and that's good to see on the results page on Telegram. I probably would just have it off at this point. I may change my tune on that. You can certainly head so forth. But do understand this. If you were to meet with, and I can promise you, if you Google this, you will see some of these interviews out there, some fantastic ones. So the individuals I follow that I feel have sort of the most to add to this in hedge fund land are Paul Tudor Jones, runs Tudor Investment Corp. He's actually a very good guy. If you don't know who he is, he was the founder of Robinhood, which is an exceptional charity. Second guy is David Appaloosa Management, or David Tepper, Appaloosa Management. Jim Simons, Renaissance Capital, the world's largest quant fund. These guys have absolutely clobbered it. Every single one of them in an interview that I've heard over the last 3 or 4 decades, including guys like Julian Robertson and Tiger, and is that big losses, they can either ruin you or you can learn from them. And learning from them is things like, was I controlling risk? Could I afford to lose the capital? Asking questions like, is it emotionally taxing me? If it is, maybe you should be trading right now. Maybe you should save up a few $100 and get back into it. And I know there's going to be many of you out there that are team leaders up and down the line. They're going to be like, well, this is pretty harsh, Steve. And, ideally I was put in this position to not be the nice guy, right? We have to learn to deal with things that come across in one's life. And, as you probably heard it say, and if you haven't, this will be some great advice for you. 90% of your life is shaped by how you react to the 10% of the crap that's dealt to you, especially the worst stuff. So, there's always great stories out there that those who went through some pretty serious tragedy and were able to pull themselves up. So I would ask you to focus on that light at the end of the tunnel, even though it's kind of dark at this point. But ideally, you can win at this, and we will put together a plan to sort of get you guys through this. So with that being said, in 22 minutes on my soapbox, let's move over to the Forex calendar. Okay. So this is kind of what I talked about. If you can see the Forex calendar on the screen here, you can see that, and keep in mind, all these times always on my screen are going to be New York time, Eastern time, US. Monday, 9:45, Lagarde is speaking in Europe. You can always click on the window, see some of what she's talking about. I expect volatility surrounding the euro and the dollar unrelated to this, and everything else that's attached to it. Wednesday, FOMC statements, big Fed funds week rates. FOMC just stands for the Federal Open Market Committee. It's their press conference. Again, you can click on it if you want to see a little bit of the dirt on what goes on in these meetings. So that's a big deal. That takes place along with the Consumer Price Index, which is a US-based huge indicator coming out. This should be interesting. I don't know whether this is going to be good or bad. Everybody's forecasting doom and gloom, but they were surprised on Friday, as many of you may recall, that the jobs numbers were not as horrible in the U.S. as a lot had thought. That, along with the markets sniffing out potential bailout packages, which clobbered the dollar, really put a huge lift to equity markets globally last week. So as I've been telling a lot of my wealthy clients that are very heavy in equities, we are peeling off some in equity land right now. Why? Because I think this ridiculous boat or tide lifting of all boats that's gone on globally, especially in equity markets in the U.S., I think you're getting a gift. And I think at some point we're going to drift lower. Maybe after the election. I don't know. It could be wrong. But all I'm saying is those that just got absolutely smacked in equity land and they've had a lift back in their accounts, 401k, so forth, I probably would lighten up on some of the risk. So, what else do I want to comment on this? I'll post this in the notes, and just the recommendation to have the software turned off this week. And run it at your own risk, but that is a choice you have, but you can also turn it off as well. Let's take a look at the Einstein large account. So this is the live 25K euro account running real dough. Had a 1.4% performance last week. I know those that are in drawdown probably don't give a rat's ass about that, but I wanted to at least show you guys the account. Account's actually done pretty well this year. So we're happy with this. Win rates have been good, so forth. These are all on the same settings I show you guys every week. Settings haven't changed. Let's take a look at the MAE, which is just nothing more than a risk. Some of these MAEs for the accounts that were running last week, they're going to look pretty crazy in this negative range. So probably worth taking a look at that. You can learn from that. But as far as the history and you can always see like how all the trades worked out and so forth. Here you can get out and go pages and pages. I'll tell you, I can't stress more, you guys, how important it is to get your accounts hooked up to MyFX Book. If you're having problems on that, just to go into YouTube. There's videos on that, on how to hook it up. Because if you ever send me a question via email, which is fine, I welcome it. Make sure those questions are phrased correctly and with full explanation of what's going on. But it would be awesome for me to have a link to your MyFX Book, because the ones that did send me their setting snapshots as well as their FX Book links, I found in almost all cases, probably 85% of these emails, their settings were wrong. And their MyFX Books were hooked up maybe okay, but I couldn't see. So make sure you get it hooked up on that if you want to send me an email. But it was really just boils down to a lot of the settings that were incorrect. So I'm not going to dig through a lot of this because I want to spend some time on Q&A, but I wanted you guys to see what's going on with the live account. We decided to set it up in euros. Got a couple questions on that. So here's, I'm going to read one question actually before I get into the Q&A. Make sure I've covered everything. I read one question I got I thought was really good. Yeah, so one of the comments that I got is it looks like big money is getting out of the US dollar in a way that we haven't seen any time before. And honestly, I wouldn't blame big money for doing that because we're getting too far in debt as a country. And I think it's setting a bad precedent around the world. Yeah, I get you want to bail everybody out. And, certainly my heart goes out along with management of Auvoria to those that have suffered through this C-19 crap. But I don't think we need to go in debt for, to climb ourselves out. I really don't. I think it's just going to do nothing for her children down the road. But here's the question I got. There's so many channels open, I can't find it. Here it is. Why did the software not see the trend and buy into the trend? It kept opening counter trend trades, and in parentheses, and betting on trend counter retracing, each of which kept adding to the problem and the level of drawdown. So once the buy trend was obvious, why didn't the software buy into it? So it just said, would appreciate your opinion. Thanks, Steve. So I asked this question to our developers, a couple of the other experts, and the consensus really is that the software simply does not operate like that. So it places trades like a martingale system that I explained a little bit earlier. They can adjust the settings, though, when a trend is recognized to only take buys or sells. Now, I will caution everybody on that. I'm not going to show you how to do that because I don't want a lot of people running out and doing that. It's really an advanced user type of thing. So, but the other comments that I got on some feedback was this is a great example of why this is not a set it and forget it software. And, it's almost like we need to have for the compliance people and everything, it's almost like we got to have that somewhere in the risk disclosure. I really do think that's something we need to add in, just as a side note, you guys. But the software does a vast majority of the work for us, but we'd be encouraging, and I continue to encourage people to stop looking at it as a flawless system. No one can predict market moves with 100% accuracy. Artificial intelligence or not, folks, the market makes moves that are unpredictable. Could anybody in equity land have seen how much stocks were going to get absolutely clobbered and just blew through all kinds of levels on the S&P or whatever large, national benchmarked index you're looking at? Just ripped down to some levels. Heck, I didn't even see that. Some people were calling for, maybe we'll see, 2,500 on the S&P. It blew through that and then bounced. And the same thing may be the case. Who knows? We may be in a much happier situation later next week for those in some pretty good drawdown. They keep asking me, what do I do? I'm off, 20%. What do I do? Again, not willing to step in front of that, folks. You got to let the software dig itself out. It's shown us time and time again. It has the ability to do that. It just takes time. All right. So, calendar charts. Let me just show this real quick before we go further. Get into some Q&A. Forex game contest. There's an update. Contest leaders. Remember, this ends June 16th, folks. So, for Alexander and Einstein at the bottom here, Mike Sancho. Good job, Mike. Doing well. And for the Iris stuff, looks like our boy A. Adams still leading the pack. So good job. Now let me shift over to this chart because I want everybody to take a look at this while I'm doing some Q&A. I want you to pay attention to that martingale strategy and understand how it works because this will alleviate a lot of questions. Okay. All right. So put the questions in the Q&A window, not the web chat, please. And yes, I thought that was pretty funny. Do keep in mind a lot of the hedge fund guys out there do talk up their book, guys. And they're usually doing the opposite of what they're telling CNBC. I do get that. But we know that. We know they're playing against that. We're really just looking for their comments relative to what's going on in global markets, for some direction. I'll tell you one big hedge fund manager. It's actually really good. If you guys are familiar with Double Line Capital, Jeffrey Gunlack. If you follow me on Twitter, I'm here. I know a lot of people ask me about this. Here's my Twitter. So you guys can follow me on Twitter if you want. It's just at FXES Trader. I'll usually retweet stuff. I don't spend a lot of time on this channel just chatting about crap because I think it's just a waste of time. But if I feel that something's important, I will retweet it. But you can follow along with some of the people that I follow. The 187 people that I follow are probably the biggest chunk of smart money out there. So this is a channel strictly for trading, markets, analysis. There's no chit chat, no BS going on in here. It's just hard data from experts, guys like Tommy Thornton. who I got on speed dial. Thank God he takes my calls. He's a great guy. He used to run a big desk for a huge fund in New York. And he really knows his stuff. His hedgefundtelemetry.com, it is a phenomenal service, of which I subscribe to. So there's a shameless plug for Tommy. But you can follow along here, and just help you stay more plugged in. A lot of the charts I'll stumble across. Some of these guys have brought them up to my attention. This is a big one. If you haven't seen a net equity put call ratio, this is sometimes can. And a lot of the stuff you see Tommy talk about is really just DeMark stuff, which is just a Tom DeMark. It's just an analysis indicator. It's actually really good stuff. Let me just switch over here. All right, so let's do some Q&A. All right. So we know anybody that's posting Qs about, we know there was some losses last week, guys. You don't need to make me aware of that. We got that. Yeah, so there are times in one's Forex life, especially if you spend some time trying to get into this, you really dive in deeper, especially with larger accounts, that you will lose money. And in some cases, you will lose your previous returns. And in some cases, you'll lose your original investment. If you cannot afford to stomach that, or this is money that you cannot afford to lose, it should not be in a trading account, plain and simple. I know that sounds harsh. I know it sounds insensitive, but I want that to come across that way because I want everybody to take a hard look at the capital they're using. The vast majority of the emails that I got that were complaints around losing money were people that could not afford to lose it, but they were willing to take the risk. If you're willing to take the risk to make the returns on the upside, guys, you have to be willing to stomach the losses because it will happen. All right, so let's see. Profanity and questions, guys, you're going to be blocked. Vladen, am I able to hook up 2 accounts to the VPS, for example, 1 demo, 1 live? I know that we are almost complete, if I'm not mistaken, Patrick, on the conversions of the corporate shift from our old VPS to our new VPS supplier, which is really great. I don't know if that's complete or not. So if you want, Vladen, just open up a ticket on that. How come UJ went up 240 pips, which is more than normal times considering the UJ? So I'm talking about the Euro JPY. David, can you post that question since you're hooked up to me in Telegram? I did not pay much attention to that pair last week. It was all mostly just the dollar stuff. 2 sell sequences running for both EJ and EU on my account for sell. Should we only be in 1 sequence at a time? I just started using the software 2 weeks ago. I had 2 sequences running. Can you send me, Sonia, that email, screenshots, link to your MyFX book? I can have the team take a look at that, please. Yeah, so Craig, if you could please, if the software isn't still holding trades in drawdown, which I would not step in front of, obviously, this week, if you had a good week or you were, out with a small profit or what have you, as I know some were, I probably would have the software off this week, yes. So if your software was closing out trades at a loss, obviously I can't see into what's going on. If the loss was, and you can go into, just look at the trades inside your brokerage account or hook it up to MyFX book if you want to see the trades in an analysis format. And you can look to see if there was a whole group of them in there that were 250 pip stop losses. Because if they're all showing up right around 250, it was hitting its entire stop loss beyond, the 6, 7, 8 levels, wherever you're at. Mark, the settings that I always show, if you guys haven't seen anything, from my previous calls, especially the last 2 weeks. Tyler was one of my special guests. The week before, it was Jesse. Both fantastic presentations. I rarely, by the way, go back and watch stuff that I haven't seen, especially if I'm part of the presentation. It's kind of like not watching your own movies if you're an actor and actress. But I actually did go back and watch both of those. Thought it was great. You are more than welcome. I was on business. What then? I don't know the answer to that. The answer was I was on an old VPS and my account was it was in drawdown for the week. But what was your opinion on this? People with new VPS made money. I have no idea the answer to that question. If I'm in drawdown and choose to stay out of the market next week, can I stay out or will keep going down? I don't know the answer to that. That's asking for me to look into my crystal ball, which is in the shop right now. I don't know. All I know is that the software has the ability to pull you out of drawdown. It could take some time. Signals. Another question. I got 20K accounts. One made profit, and the other made loss of 4K. Can you please clarify? Are trading the same or different? M. Siddiqui, if I'm pronouncing your name right. I don't know what's going on with that. It's tough for me to forecast what's going forward. It's also tough for me to see what went on inside your brokerage account. One of the important reasons you want to go back and watch the call, especially with Tyler, is he goes in and points out how to determine if your Forex broker is worth a crap or not, right? So I'm not going to get into that because it's a pretty deep dive. Just watch that previous presentation, and you guys can see. Because again, I continue to get emails of people that give me full information, which is great, and in some cases, their Forex broker is playing games with their account. Bo, thank you, my brother. Yeah, Nathan. I mean, if you want, you can go in and change anything around. You can put in trades yourself. You can turn trading software off. I mean, there's all kinds of stuff you can do. But I always caution people, if you don't have experience going into this, I wouldn't even think about entertaining that. So, what is your opinion with GBP NZD for the week? Will it go up or down, and what do you think and why? Now, here's where I'm going to default to a smarter individual than I, Jesse. I would suggest getting into his channel. He's done a lot of videos on that. I'm not sure to what degree there was forecasts. Nothing more than should be forecast, in my opinion, from any coach, other than next week could just be bananas. You probably should have the software off unless you're in drawdown. Can't see my Twitter page? No? Let's go back. Let's reshare. Here you go. Let me X out of this. You can see what's going on. So that's me. Follow if you wish. Let's see. Personally. Max, the settings I use personally are, I'm not logged into the account right now, but I've shown them time and time again. The settings are also on my trade tracking channel. I've taken multiple pictures and screenshots on that. Get into Telegram if you haven't. Good stuff. All right. I have no idea this next question of when it's going to be good this summer for trading or not. I think that whole summer thing is, selling May and go away, right? I don't believe it. Yeah. Just money to make. There's opportunity to make money 5 days a week. Do we split the recommended lot size of 0.01 per 3,000 between the three pairs? For example, do we use 0.01 in the settings per pair for a 3-pair ring? And for a $6,000 account, would it be 0.02 per lot size on a 3-pair ring? Please clarify. Sonia, can you send me an email on that? Because there's a long explanation. on that. So is the 6K live? Is it US dollar? Is it euro? What does your settings window look like? I have a calculator I can send you a screenshot of that clarifies that. No, Max, I can't. I don't have the ability here. It's at, actually, sorry, I can do that. At fxtrader.com. That's my handle on Twitter. Is Euro USD going to do a drawback in your opinion? Oh, I mean, it's stretched out so much, especially with the Euro US dollar to the upside from the Euro standpoint, from a downside to the dollar standpoint, that I think we're due for a pullback. We already saw a little bit of a one late Friday. I don't know if you're looking at the chart I showed. So Julio brings up a good question, and this is another example of, we have a presentation last week was done by Tyler. I'm not going to get too much into it today. You notice I keep like teasing you guys to go back and watch other presentations, right? That's for a reason. Is because we announced last week some new settings for more volatile settings, which is just essentially flipping the position size multiplier. You can go back and look at that if you want to see. That'll answer your question. You know, setting up essentially more conservative. So I think probably going forward in the future for some of our bigger live accounts, I'm overseeing. I'm probably going to be changing the ring, and that's probably going to freak some people out. But the data is just not there right now. So we're probably going to be switching over to some different stuff, and I think we're going to be going forward using the volatile settings change as well. So stay tuned for that. I'm trying to get, I've been tied up with other stuff this week. Frankly, guys, I really haven't had the time to dive into this. So I'm going to take a look at it a little more today. I don't know the answer to that, Stefan. Don't know. GBP. Don't know the answer to that as well. You guys are asking me to pull out my crystal ball, and it's not working that good. Also have the VPS running. Also says the other VPS is also running two cursors and charts. I don't know the answer to that, Mark. I might want to open a ticket on that. That's a question for our back support team, who, by the way, deserves a serious shout out for the work that they have done converting everybody over onto the new corporate VPS. My hats goes off to Patrick and the team. You guys are awesome. No, we're not using the same settings on the 25K live account. No. The question is, what happens if you're in drawdown on Tuesday or Wednesday and you turn your trading software off? I would not do that. Given data on the efficiency of just only trading one pair but increasing the lot size. So instead of trading 3 pair at points, well, maybe just trading 1 pair. Yeah, I mean, Philip, the problem with just trading 1 pair, just from a general risk discussion, is that if you're just trading one stock and something happens to just one stock, you don't have enough diversification, right? So just from a general risk discussion, you know, this is a reason why you don't take your $1 million and put it all in Apple Computer or Microsoft, right? It's just not diversified enough. So, I mean, I can't tell you guys how many times back in the day that I was branch rep in the Fidelity office in Philadelphia, and Fidelity runs, you know, tons of 401k plans. They run all the big farm plans out east and so forth. And people would just come in with, you know, like a Merck plan or a Pfizer plan, and the whole thing would be the entire company stock in 401k. I mean, it just blew me away. They're like, oh, but it's been going up 15% a year. And then as pharmaceuticals just got clobbered in the early parts of 2000, some of these people lost half their account because it's all in company stock. Don't ever make that mistake, people. You learn nothing from these meetings. Don't ever put all your money in one stock. Steve, I'm not trading on the pairs that you reviewed on Forex Factory. No EU, no JPY, no USD. I know the USD can have an effect across Forex, which is true. But if not trading those specific pairs that you eliminate on Forex, would you have the same recommendation to stay on the market? I would for now, unless, and this is, by the way, this question is from Alan. He's one of our big guys at the company. Right now, I can't foretell the future enough. I really can't. So again, if you haven't really taken a beating last couple of weeks, or if you've had some pretty decent profit, like some of our live accounts are showing have, they're going to be turned off next week. Previous presentations can be watched by going to, here, I'll show you guys. Everything's bookmarked that I do just in an Auvoria only folder. Just go to your back office, which is just Auvoria Prime. This is what the back office looks like. You can get down to the resources tab right here. You go to Einstein and Alexander trade week forecasts. And there you can see my ugly mug, and it goes through all of the previous recordings, all my notes, all kinds of good stuff. As I often joke with students before I took this role with Auvoria, watch my video so much you're sick of listening to my voice. But it will help you. Go back one. Let's see, what settings you talked about changing the hedging setting to prevent double trades. The whole explanation of that, Mark, is on my Trade Tracker channel. Check it out. With the software's capability to pull one out of drawdown, does that possibility include one having to continue to accept trades, hedges, counters, etc.? Or should someone in drawdown just allow the trades that are in drawdown to play out and not accept anything further? I get slightly confused on that. Honestly, DK, we've had a lot of discussion in the corporate circles on that, and I seem to get confused. Some people want the pairs to be turned off. So if you're saying that I'm not talking about adjusting settings to be more conservative, that certainly is quality advice. But if you're willing to say, hey, I'm going to just turn the software off, will it take new trades? Can I turn it off and not just have the stuff that's already in drawdown? I mean, there's varying degrees of opinion on that. But as far as my communication to all subscribers out there in the lands is I would just let it pull you out of drawdown if you can afford to stomach the risk. If you can't, probably shouldn't have set that live account up then, huh? So I think that the problem is a lot of people just get too myopic, looking too much short term on this stuff. They're not looking long term. I think they also get dazzled or with the performance to the upside, and they're just paying attention to that, and they've never ever had any kind of losses. I mean, I can tell you guys plain and simple, in futures land back when I was learning to trade back in 04, 05, I mean, I routinely would have weeks where I completely blew out a 30 grand account. Why? Because it's mostly just stupidity on my part in thinking that I was smarter than the markets, and they proved me wrong time and time again. And it took a while for me to sort of leave my ego at the door because I'd come off just a hugely successful career, made a whole pile of cash, and I figured, hey, I'm great, I'm smart, let's just go in and try and trade this. And I just got clobbered the first month to the tune of almost 50K. I learned some hard lessons on that. And one of them was leave your ego at the door. No, I do not have an Instagram ground, Jerome, that is for teens. No offense. Can't stand Instagram. No, I have no selfies taken of myself either. How's it going to take effect settings if you do that during the week? I would turn off. You might want to push that up a little further in the chain, Mark. You seem to have a problem with something. You put like 6 questions on this thing already. Just hit those guys up with that. If you got a problem with it, send me an email. I'm trading only one pair next week since we have some red folders on US dollar. Would it be wise to select US dollar for small accounts like 1200? So, T, you ask a good question. And again, I know this is going to upset a lot of global directors, but I do not recommend setting up a live account with $1,200. I just don't. I think this software does a much better job when it has a larger account to trade on. Okay. And usually if somebody is setting up a $1,000 or a $500 account, just know this: we have some really good software coming down the pike in beta test right now that is showing some excellent promise that may be the potential for that account right now. But I just don't feel you should be trading with an account that size. I'd want to see it at least $2,000. And if somebody can't put $2,000 together in that account, that's also telling me that they probably can't afford to lose it. So I'm going to read some of these notes that some of my team have posted. I think that's good. And this one is all right. So here's the question. Let me just read this. This is from our executive team. So it says, what are your thoughts on this? The fact is EJ, UJ, and EU, which is just a ring, is the worst combination you can choose, because if any of the Euro, JPY, USD have drawdown, then you'll always have at least 2 to 3 pairs in drawdown. So the risk is at least doubled. So if we're going to promote the A ring, right, it should consist of pairs that offset each other and are not so trend correlated. Okay. So the opposite is valid as well. So you could have 2 pairs in good profits and 1 in drawdown. The feature to avoid double sequence should give a big improvement. In any ring, you will always have 2 charts moving in the same direction. The alternative would be to trade only 2. Okay. So, and then the response to this, which I thought was good, it says, I think that the key is less pairs always for less exposure and high volatility settings. Solved many of the problems we've faced in the last week. The problem is most weren't educated on them, and that's really just probably, we're just not getting the word out. So as I threw a challenge down to a couple of directors last week, I'll throw this challenge out to the whole company. A lot of what I post, Jesse, and some of the other coaches post is not translated into, French, German, Spanish, some of the other languages. I would highly encourage whoever to translate my channel and make sure that, especially for a lot of our European-based customers, that you get everything we have translated. I don't have the time to do it. I know that some of the directors out there, it's really easy now. You can just go into Google Translate, drop it all in, and it'll convert it to almost any language. It's really good stuff. So I would highly encourage you guys to do that. Let me just go through this real quick. Question. Yeah, Christina, I get your pain on all that, but this is just a sort of a welcome to trading. You're welcome. Appreciate that, Max. We can't always be, can't always foresee stuff, I'll tell you. My Telegram channel, this question gets asked a lot, and boy, I wish I knew how to share that link. Tell you what, could somebody take my Telegram channel and drop it in chat? So Jay, it says, what are the questions being posted? It's in a separate Telegram channel. No, I have a Telegram channel called Trade Tracker with Steve Vetterl, just like there's another Telegram channel called Trade Tracking, ING with Jesse Kamer. That's for the NZD ring, GBP NZD rings. So you just log into Telegram, and maybe somebody wants to put that in there for me. It'd be helpful. Please briefly review the starting lot sizes section in the back office on the page you're showing. My question earlier pertained to this very topic regarding how to manage lot size in the settings. So we made some changes too, and I'm not sure if I updated that last week. I don't think I had the time to do that, but I'm going to be changing the settings to reflect a more conservative nature. I'm also going to be changing the settings to reflect our new settings that were released last Saturday by Tyler and Company, essentially just flip-flopping the range multiplier here. Since I'm getting a lot of questions on this, let me just shift over to Einstein here. All right, here we go. So let's open up the settings. So these are the settings. If you want, I can also take another picture of these, put it in. All we talked about last week is, if you see I'm highlighted a range multiplier, we just flip-flopped it from the position size multiplier. Just makes it more conservative. Also gives you a higher level of ranges of trades that get opened up as well, which again is more conservative. I don't know. I haven't looked at the exact numbers, haven't had a chance, but I would assume that accounts were in less drawdown last week, that it's flipped these settings over. Telegram channels in the chat window, guys. Yes. You can compound. I'm not sure what you mean by compound, but you can run Iris and Einstein and do manual trading as well. For Einstein, the auto trade randomly shut off. I noticed there was no connection and had to relog in before hitting the auto trade button. Some others I know had the same problem. Has this been common since the VPS up? You know, it's possible, Nathan. That's entirely possible. And that's a question for the back office guys. You know, just open up a ticket. You know, just give them feedback. You know, when you guys open up a ticket in the back office, you know, be just like a feedback type channel, right? You don't inundate Patrick with lots of feedback right now and his team, because they're trying to get the VPS shifted over. You know, but do give some feedback, not in the next week, but do give some feedback as to what's going on. If you think there's problems with the software that the developers need to know about, and it has nothing to do with settings or loss, just has to do with how the operation of the software is working, let us know. Send me an email. Make sure you can prove that, though, not just that, you know, I think it's not working well. You have to be able to show us what's going on. All right, so we're coming up at 11 o'clock. Here we go. It just ticked over, so we're an hour into this. Let me just quickly go through. So Adi asks, hi Steve, which one of the software packages would you recommend to a completely new trader and why? I have Einstein now, but I'm feeling that Iris Alexander would be better to learn. I mean, they're all good, Adi. It just depends on the kind of time you have, right? So if you're overseas and you have the ability to have Einstein, you know, which is runs a little more, takes a little less of your time than, you know, obviously approving trades with Alexander. You'd maybe want to run Einstein. Now, if you do want to run Iris, which is really good, it's basically a wedge alerts add-on. You know, you have to just approve that many more trades. So if you're running both Iris and Alexander, you just have that much larger of a list of trades of always to be approving, right? So if you have the time from that and you want to do that, but, you know, as I always caution everybody, and you heard Jesse talk a lot about this in his videos, you know, you want to make sure that, you know, you understand generally what's going on with chart patterns before you're accepting these trades. So, I mean, the software does a lot of work for us. It takes, God, I'd say maybe 70% of the work off the table. But that other 20 or 25 or 30% of your time really should be spent on managing risk, making sure the settings are correct, having the software on and off during, you know, periods of high volatility. Yes, it will shut off if it hits that goal. Dan asks, would it be a good idea to set the trailing equity from Monday or Tuesday? Who cares how soon you hit the target? I generally find I make most profit on Tuesdays and Thursdays, But if we anticipate a tricky week, we can set a lower target threshold and start trailing way sooner. Yeah, you certainly have the flexibility to do that. Absolutely. The second part of your question is why doesn't it trend trade? If you use the hedge before additional series, then it would be placing trades with the trend anyway to offset your drawdown. Like you said, martingale is just surviving with margin before reversion to the mean. So if you can hedge that, buys you more time. Are people not doing this? No, they probably aren't, and I can tell you that because keep in mind, well over 90% of the subscribers of Auvoria have never had experience with trading before. So hence why my role is important. Keep everybody on track and keep them out of danger. Which doesn't seem like I did a very good job of last week, huh? Maybe I should be fired. But, who knew? We knew it was going to be volatile. So that's all we can know. All right, let me just double check one other thing. I notice a lot of you guys ask questions in the chat window. You guys know I don't even look at that stuff really, do you? So, I mean, the questions really need to be asked inside the Q&A window, because then as soon as I'm finished with them, I can X them off and go on the next question, right? So do get in the hang of not, I don't see any reason to have an Instagram account, by the way. So maybe you guys could tell me otherwise. These questions answered. Cool. Hey, you guys are being nice to me. I didn't see any crazy questions coming at me, right? Oh, one thing to note, take a look at my screen if you have the ability here. See this moving average period? So our conversation with the developers went like this last week. Hey, just want to update on what's going on with some changes that are being done to the software, and our developers explain kind of what's going on. Myself and Jesse were just kind of showing data and so forth. But I thought it was interesting that they brought up that they're now testing out a moving average period that is different than this 20. Not going to tell you what it is, but it's a higher number. So it has less chance of drawdown. Essentially taking trades that are not necessarily more of a sure bet, but have higher win rate odds. So stay tuned on that. So great thing I love about this company is that between all the beta groups that I'm in for testing new software, different iterations of the software, and some software that's completely different, the key focus in all of this is limiting drawdown, which essentially is the most important thing in any type of automated trading program. You just got to limit the amount of drawdowns, essentially the hits or the losses, if you will, that the accounts take. So it's important that should be one of the main focuses, because if you can limit, because the win rate on this software is good. So if we could just reduce the drawdown or the risk associated with it, that gives us just a much higher, better chance for win rates. But some of the win rates I saw and some of the stuff the developers are working on, and these are the developers for Einstein and Alexander, looking really, really favorable. Some of it was great. And it wasn't trading the developers' accounts the last 2 weeks. So some of this nuttiness that we've somewhat gotten caught up in, some more than others, it's the fault of the crazy marketplace and not one of us specifically. And by the way, just on the side note, please do not open up a ticket for Patrick's group, any kind of ticket for the back office unless you have problems with something. Do not open up tickets and complain to that group. If you guys have complaints or anything like that, you can send them to me directly. I can almost promise you most of the complaints we got came from people that could ill afford to lose the money. With that being said, today is May 6th. I am Steve Vetterl. Thank you for the questions. Keep them coming. Feel free to torture me. I can take it, folks. I've had very thick skin. But at the Sunshine, just understand volatility will happen. And there will be other times in one's life where you will lose money. And it may not be Forex. You have to learn to be able to deal with that. You're going to have real estate deals that go down the toilet, right? You're going to crash a brand new car that maybe wasn't insured correctly. Your kids are going to borrow tons of money from you and promise to pay it back, and you'll never see a dime of it again, right? So you have to be able to deal with that. And at the end of the earth, it's, hey, if you cannot afford to lose it, please do not put it at risk. Steve Vetterl, guys, wishing everybody a good week, and stay safe.